All right, welcome back. The Kansas City Chiefs go for 3 in a row this Sunday in Super Bowl 59 down in New Orleans when they meet the Philadelphia Eagles. Who better to size up the game and talk some markets than broadcasting legend Al Michaels? There he is. It's good to see you always. Welcome back.
Judge, this is my favorite show on television. I feel like I'm looking at my extended family. Love you guys.
We feel the same. You're welcome at our dinner table, Al, anytime, and you know that. And it's great to have you ahead of this game. What do you think the deciding factor might be here for whether the Chiefs get this 3 in a row or the Eagles get redemption against the Chiefs?
Defense. Everybody's looking at Jalen Hurts, Patrick Mahomes, Saquon Barkley. I get all of that. I think you have two of the best defensive coordinators of all time, Steve Spagnuolo with the Chiefs, and you have with the Philadelphia Eagles a man who's been there for a long, long time in Vic Fangio. So I think if it comes down to one thing, apart from something crazy really determining the outcome of the game at the end, it's the defense that dominates. It's the defensive line that I think can put the most pressure on the offensive line. You know, you're always talking about keeping Mahomes in the backfield and all that. It's the same scenario for every game, but I think defense prevails on Sunday.
Spread's pretty tight. Kansas City's given 1.5. You've seen so many of the great quarterbacks play, Al. Where does Mahomes, in your mind, rank if he gets this 3 in a row?
Well, he's near the top to begin with, and it's like, you know, what do you want for dessert? You have two great desserts to pick from at the end of a fantastic meal. So, you know, you look at Brady, and you look at going back, obviously, to Joe Montana and the other great quarterbacks, and Mahomes is right there. I mean, he is certainly in every conversation about the greatest quarterback of all time. And I know people like to delineate. This guy's got to be 1, this guy's got to be 2. I don't feel that way. I enjoy both of them. I think they're both terrific, and I think it's very hard to separate them. But, you know, Patrick is right there, obviously, with Brady. He's already there right now. He doesn't have to win another Super Bowl as far as I'm concerned.
Yeah. How about Hurts? You know, he doesn't get the love, so to speak, that a lot of these other, you know, upper echelon quarterbacks do. I assume that this Sunday's game can change a lot of the conversation around him.
It can, and don't forget, even when he lost a couple of years ago, he had a phenomenal day. So they gave up, I think, 38 points. You know, he was responsible for 35 points. I mean, that's about as good as a quarterback can do or is expected to do. So obviously, you know, this is a feather in his career cap if he can pull off a win. And I think before his career is done, he'll win one, at least one.
We played the clip a little while ago in our tease of Josh giving you that eBay stock pick back on September 12th, which did quite well, we must say. You sold out of that recently, correct? You took your money and ran.
Only because I had to avoid a margin call on some other stocks that I had, including, as Josh well knows, a day trading stock I bought in 2010 that's still in the portfolio 15 years later. So I'd like Josh to come up with a day trading stock I can buy that I can hold for the next 15 years. Go, Josh.
You're in luck. He has a new name for you. I'm going to turn it over to Josh, and you guys can have a moment here.
Good afternoon, Al. This is Josh Brown from Ritholtz Wealth Management. We made a commitment to get back to you only when we isolated a situation that we thought had maximum near-term upside potential. If you have a pen, I'd like to give you the ticker symbol.
Go for the gold.
All right. Name of the company is Moody's. The ticker is MCO. This is a $499 stock that I think when it breaks 500, all bets are off. You've got price targets across Wall Street. Goldman Sachs, Citigroup, significantly higher than today's price. And Berkshire Hathaway owns 13% of the company. This is one of their longest-term holdings. They've been in it for about 25 years. What's happening with Moody's, Al? Very simple story to understand. Two companies in one. You've got the investor services side. You've got the analytics side. The analytics side is blowing up into a full-blown AI data business for Wall Street professionals, you name it, private equity, private credit, hedge fund, investment bank, asset management. Everybody's using Moody's data. The markets are on fire. This company sits in the sweetest of sweet spots. I'd like to put you down for 1,000 shares just to get to know each other. If this trade works out, I want to promise you'll work with me much larger in the future. What do you say?
You're already moving the stock. You had it at 499 when it's 501 when we had that. There it is, 502. Look at you, Josh. You're moving the market as we speak.
They report next week, Al. February 14th is the earnings. Valentine's Day. Be my Valentine. Take 1,000 shares. I'm telling you, I won't let you down.
Be careful now. I'll be your Valentine, but
how would you like to title your account, joint or individual?
So let me ask you a question. A $500 stock is it's a hard stock to buy because you like to buy a lot of shares. Would you buy calls?
This is a function of what your time frame is. What I would tell you is this is how I handle it. I like to reduce the price by a decimal point. And I like to say, instead of thinking about the stock was 41 and now it's 410 and now it's 500, I say, it's a $41 stock that went to 50, no big deal. You'd still buy it. So I do that kind of mental math in my head all the time, and I find that it's a good framework to think about these triple-digit share prices.
I want to know if Joe Terranova also agrees with you, and can we get Farmer Jim? Farmer Jim is probably out on the farm somewhere.
No. If Jim buys it, forget everything I said.
No kidding.
No, that's.
I didn't want to bring up Cleveland Cliffs, but I can't go on this show and not bring up CLF, right? You know that. Come on.
Of course.
We're all brothers in arms.
We are. Amazon reports tonight. I was told you want to talk to Josh about that as well, or the guys, because everybody here owns Amazon,
right,
and you must as well. So what are you thinking about here ahead of these earnings?
And I work with them. So somebody explain this to me.
You do.
Let's say I saw Josh before. Josh thinks it's a $300 stock in disguise. I hope it is. But the thing is that I can't figure out is when stocks come out with earnings and they beat by 10%. All of a sudden, it's wow, and there's a pop early on, and then they have the call, and the thing it tanks 10%. There's the reverse also happens. Stocks don't make the number, and they go wildly up. Why does that happen? It's a macro question, guidance. But I'm curious. Tell me why.
Forward guidance, because they put out the press release and tell you how they did over the last 90 days, and you get one reaction. Then they tell you what next quarter or full year is going to be, and everybody says, oh, I don't care about last quarter anymore. Now I like it, or now I really hate it. So that's why you get that effect, which is why I think so many of the hottest tools that are coming out for investors have to do with instant transcription of conference calls.
Steph, I want to get Stephanie Link's take on this, too. So, Al's getting those Amazon paychecks. We know that, but he wants more, Steph. He wants this stock to do well on earnings. What does he need to see tonight?
Well, I think all the focus is on AWS, their cloud business. The expectation is for in print at 19%, but I think the whisper number, Al, is 20%. So they probably have to do 20% plus for the stock to react favorably. But the other thing that's really, really important is the profitability. The company in 2024 grew operating income 85%. That's just enormous. So it deserves the higher multiple that it gets. But the guidance going forward, as Josh just mentioned, it's likely to be conservative. They typically are. But when I like a stock, I actually kind of root for it to go down so that I could get a better price action for it. And I do think that if this stock were to be weak on AWS, I think you want to own it and buy more on the dip.
Are you in Josh's corner? Is this a $300 stock by the end of the year or maybe middle of next year?
I think it goes a lot higher, Al, because there's three ways that this company wins. Retail, we know they have the dominant share in e-commerce. I think that grows upper single digits to low double digits growth for the foreseeable future. AWS, as I just mentioned, and by the way, AWS margins are very high. They're going to do something like 35, 36% margins versus low single digits on retail. So that's why we root for AWS to do well. And then ad monetization is also very important, and that's being improved by AI. And the channel checks have been very good. And again, as I mentioned, profitability, this company has gotten religion. They're not just spending wildly. Yes, they will increase their CapEx for AI initiatives, but other parts of the business, I think they're going to be much more prudent. And that's why people are more excited about this story for the next couple of years.
Well, here's a shout out to Andy Jassy, who's the ultimate boss. So Andy created AWS, of course, and that's why he ascended to the Bezos position. and I've gotten to know Andy extremely well because Andy is a gigantic sports fan. And when you're in the sports end of the Amazon universe, what better than to have a man who loves sports? And as you know, Amazon's getting more and more and more into sports. There's a story today that's out there somewhere about maybe Amazon buys Madison Square Garden Network. I just saw that someplace. I have no idea where I saw that. But anyway, there's a lot of stuff that's out there. And Amazon, as is probably the case with Netflix, and they proved that on Christmas Day, more and more these streaming giants are getting into the sports world, and that's great for for me, obviously.
Yeah, I mean, you saw it firsthand, Al. The ratings numbers for your broadcasts on Prime were up, just huge numbers. The commissioner himself called that out in his annual press conference down at the Super Bowl the other day. I heard him do that. So continued success. We got to do this in person sometime. You got to come sit on the desk with us, even if it's a special trip to the New York Stock Exchange, because we'll have you anytime.
Well, at the Milken Conference, you guys come out, and I'll come over to the Beverly Hilton. A much easier trip for me. Come on.
It's much easier for you. All right, all right. We'll see what we can do. Al, you're the best. We appreciate your time so very much.
I'll have those account forms out to you shortly, sir.
Love you guys.
You as well. That's Al Michaels. Take care, man. We'll see you soon.